Hey, good morning, everybody. How are you? I hope you're having a great week. Being a short week, right? After the holiday, I hope you had a great Memorial Day. And I do want to say thank you to anybody who served, anybody who's serving today. Thanks for your service, whether you're in the armed forces or a first responder. Appreciate everything that you do for us and for our country. Welcome to the Mic Drop Show, where we all talk about real estate, real freedom, and real results. And that's what we're looking for, is we're looking for real results. Hey, I'm your host, Mike Morawski, the multifamily bounce back coach. I'm an investor, I'm an educator, and I'm your favorite deal sourcing, cash flow obsessed guide through the wild world of multifamily real estate. Hey, we do interviews here with 8-figure investors to break down deals, capital raising strategies, and war stories from the field. This is the show for professionals who want to go from their paycheck to portfolios. If you're feeling this energy, don't forget to subscribe. Smash the like button and follow me wherever you're watching or listening from. We're always bringing great content to you, trying to enhance your life and help you grow and scale your business. If you've got questions, drop them in the comments, DM me. Your topic might be the next topic that we talk about on the Mic Drop Show. Hey, we go live every Wednesday morning. This is your weekly wealth workout. All right, let's get into it. You know what? I have 3 questions this morning. It's been an interesting week. I've gotten a lot of questions from coaching clients, but not just coaching clients, from the other people listening into the show. And that, last week on my group coaching, I talked about how to read a rent roll. And subsequently, the question that came up after that, and the first one was, how do I analyze a rent roll fast without going line by line? And one of the best ways that I have found, if you can get that rent roll brought to you in an Excel format where you can manipulate it in Excel, there's different strategies you can do. You can do a pivot point and be able to get a unit count and a square footage count. Typically at the bottom of a rent roll, there's averages, right? But you want to break those averages out. 1 bedrooms, 2 bedrooms. Are they 2 bedrooms, 2 baths, 2 bedroom, 1 bath, 3 bedrooms? And how much is the square footage, and what's the price per square foot? These are all the things that you want to take a look at, because there's a comparison with those to other properties in the areas. Hey, do I have the ability to be able to raise rents? And can I achieve what I'm trying to achieve after my capital improvements? So you can kind of look at that quickly. If you're underwriting and you're working on underwriting, my tool, my spreadsheet, lets me put in all the different unit mixes, the square footage, the current market rent, and I can get a good view of that. Then I can go in and put in my loss to lease and all of those other fundamentals or metrics that give me my totals. The second question that I got asked this week was, what the hell is a T12? And I love that, right? What the hell is a T12? Well, T12 stands for trailing 12 months. This is a snapshot in time for the last 12 months of operations that a property has operated. The person who asked the question went on to say, does everybody talk about it like they should know? And they just kind of laughed about it. But, you don't know, right? This is all part of multifamily language, and how multifamily is a different language, a different animal in its own. I spent 15 years in the residential world selling residential real estate, and all of it, I didn't all of a sudden decide I wanted to be in the apartment business, but had thought about it for years. And when I made that transition from single family residential fix and flips, buy and hold, to apartments, and the first time somebody said to me, cap rate, NOI, yield maintenance, I was lost, right? We don't talk that way on the residential side, but when we get into the multifamily business or even the commercial space, you have those acronyms. So, that's one of the things I like to teach people that I coach is the language, right? How do we talk about it? How do we communicate those things? But a T12 gives me that snapshot in time. Now, there's something I want to talk about. There's a couple of different reports that you can get. You can get that T12. And whenever you're underwriting, you want to take that T12 and you want to use that for your expenses. The reason for that is you have double payments in a lot of cases on a T12. You might have 2 tax payments throughout the year. You might have a couple or multiple insurance payments throughout the year. There could be other vendors that you pay multiple times throughout the year, maybe security or whatever that other vendor is, garbage. But you want to make sure that you have a clear vision of what that 12 months of operations look like. Because what happens is you're going to put those numbers into your underwriting tool, and then you're going to pro forma the future going forward. And you're going to say, hey, can I run this property the same way the current owner's running it? Or can I run it better than the way the current owner is running it? So that's what the T12 allows you to do. But I also want to just add to this that there is a report that's called a T3. That's the trailing 3 months. And for the income side, for your rents that are coming in, that's the best snapshot in time because that's the last 90 days. And by the last 90 days, you're actually getting a good snapshot of who lives there today, right? Remember, when we're underwriting, there's 3 ghosts that we want to look at. My friend always tells me, he says, hey, think about the ghost of Christmas, right? The ghost of Christmas past, the ghost of the Christmas present, and then the ghost of Christmas future. Anybody who's watched Christmas Carol knows that story, right? But it's the same thing when we're underwriting. When we're underwriting, we want to look at those 3 ghosts. And you can look at a T12 and you can see some trends and you can see some history. But the T3 really gives you a good snapshot in time for the income coming in on that property. So then you look back, right? Because it's not just today, but you got to look at history. And history, sometimes you have to look 12, 24, 36 months back to see the trends, to see the rent growth, to see the expense growth, and to be able to pro forma those on your underwriting tool. So remember, use the T3 for your income and use the T12 for your expenses. One of the sessions I do in my coaching or my group coaching platform is I teach how to read a T12, right? And how we use that in the underwriting. And I think there's different things that you want to look for. You want to look for trends. You want to look for anomalies. You want to look for ways that things just don't look right. I remember one time I was looking at a property, and this is a great story. We were looking at an apartment complex. It was about 290 units. It was in Iowa. And on the T12, the landscaping bill was extremely high. I want to say that, the landscaping bill was like $27,000 or $28,000 a year, which seemed really high. I had gone during my preliminary underwriting and had called a couple of landscapers, and I got a couple of bids that were about 50% less than what the owner was paying. Well, I was out touring the property, and when I was walking the property, the owner was there. And the owner and I said, hey, can I talk to you for a few minutes? And the owner and I kind of walked by ourselves, and we were just having a conversation about the property and some of the things. I said, by the way, let me ask you, why on the T12 does it show that the landscaping is so much money? I got a quote was for half the price. And he said, he goes, my brother-in-law owns the landscaping company. I pay him double payments. At the end of the year, he gives me cash back. So it was a way that owner was getting cash out of the property and writing it off. And so, everybody does things differently, right? Sometimes owners will put other personal expenses in their properties, and you have to dig through those when you're looking through those financials in order to sort them out. So then the third question I got this week was, what are the top 3 things to check in a T12 that could kill the deal? And the one thing I want to say is I don't know that anything in a T12 could kill the deal. You just want to figure out what it is. One of the things that I always want to look at is, there's that line item that's other income. And, sometimes I see other income could be $200,000. Well, where is that money coming from? Right? I want a complete breakdown of that other income. I want to know how much of it comes from application fees, late fees, move out expenses, pet fees for parking, laundry, for other amenities that complex might be charging for. I want to see that breakdown because I want to see those trends too on other income. Another thing that you'll see, like I talked about a minute ago, was the landscaping, right? You might see trash or landscaping, something being extraordinarily high. And it may just be a matter of you going and getting a different quote. Maybe the current owner hasn't looked at it too much and is really not aware that it looks like that or that it's that high. The other thing, and I always want to look at this, even when you're doing asset management. So you own a property, you should be asset managing that property, right? On the phone every week with your property managers, you're talking through the financials, you're taking a look at occupancy, 13 to 15 things that you look at during asset management. And one thing I would say, hey, if you're somebody who wants a checklist on asset management, DM me, send me a message. I'll send you my 15-point checklist of everything that we talk about on a weekly basis on our asset management calls. But one thing you want to look for is a jump in expenses. So let's say that you're traditionally going along at $2,000 a month, and then all of a sudden, one month you have a $5,000 expense on a line item. Well, you want to figure out what that was from. Let's just say that it was outside contractors, right? That somebody had to come in, rot a sewer, just do some, other make readies maybe, or some painting. And, consistently you're spending, $200,000, $500,000 a month, but all of a sudden now you spend $5,000. Well, what happened? Did I have to replace a sewer? Did they have to replace an electric panel? Dig in, find out what that anomaly is. I don't think it should kill the deal unless it's something that happens consistently time over time. But there really should be nothing in the financials that kill a deal. You just want to find out and know exactly what they are and why they're there. And can you run that property better? That doesn't mean that you're not going to have a sewer problem or an electric problem or that you're going to need to replace a roof, but just futuristically take a look at that stuff down the road and see how that's going to work into your underwriting to your capital improvement project. Well, that's a wrap for today. That's kind of the end of the questions. If anybody has any questions on any of that, hey, don't hesitate to reach out to me. But this is the Mic Drop Show. I hope that you're walking away with maybe a little bit of information this morning, maybe a shift in your mindset a little bit from your current thinking. I talked to a lot of people today and a lot of potential investors, and people are a little bit edgy about the market. Well, you know what? If you're underwriting a deal and you put together a great blueprint on that deal for operations and moving forward, there really shouldn't be a lot of uncertainty around that, right? Hey, if you're locking in a fixed interest rate and you're going to get up every morning and that mortgage payment's going to be the same, then why would you worry about interest rates being high today? Especially if you're in a positive yield position. And, if some of this is a little bit outside your box, you want some explanation on it, don't hesitate to reach out. Listen, wealth doesn't happen by accident, does it? It happens by design and by the action that we take. So take the information that you get, the little bit of knowledge, that gold nugget that you got this morning, and go put it into action. Go grab a T12 from a deal package and read through it. Take a look at those line items. Take a look at the flow of money. So whether you're just getting started or you're trying to scale a portfolio, just keep showing up and leveling out, right? The more you learn, the more you grow, the more action you take, you grow even more. So it's about taking that education. I always say, hey, you got to draw a line in the sand, right? Here's today. Here's what I've learned today. Now let's take a step forward. Let's use that. Let's put that into action a little bit. So listen, if this episode's given you any value, do me a solid. Would you smash the like button, hit follow or subscribe, and share this with someone? So whether you're on Instagram, whether you're on Facebook or YouTube this morning, hey, go ahead and like us, follow us, subscribe to our channel. We're trying to get you from your paycheck to get into a portfolio, right? This is about not living a life, but designing a life for yourself. What's your purpose? Where do you want to go? How do we help you get there? And if you got a question about topic or anything I talked about this morning, if you have a guest that you'd want me to get on, don't hesitate to reach out. If you're somebody who'd love to be on and be interviewed, reach out to me. Let me know that. So remember, we're here same time every week, every Wednesday morning at 9:30 Central Time. You know what? Same energy next week, right? But until then, stay focused, stay cash flowing, and keep stacking your door.